Hello, investors. This is Ted Zhang, Portfolio Manager at Revere Asset Management. Today is Wednesday, March 26th, 5 p.m. Eastern Time, coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Market state, short-term pullback. We've changed that from a short-term uptrend to a short-term pullback after today's distribution day, below the 200-day moving average and the 21 exponential moving average. Market leaders we currently have at neutral, but many of the relative strength names pretty much saw relative weakness and distribution days today. We had to sell some of those names. So we have a red sub arrow for the market leaders. Short term, we still have neutral with the red sub arrow. We are back below the 21 EMA for the S&P and the NASDAQ. But since it's just day one down, we're giving it a little bit of buffer, but really close to back to red arrows there as well. Medium term trend still below the 50-day moving average on major indexes. So we have a red arrow there. And then long term, we are dancing at the 200-day moving averages for these major indexes. So we currently have a neutral sideways arrow, but with a red sub arrow. And we will make the appropriate changes as the markets play out. What happened today? Risk off as distribution returns to the markets. And this is exactly what we wanted to avoid, distribution. And that came back to the markets. 21 over 21 list, leaders list, down 3.31%, 2 up and 19 down. So definitely weakness in leaders today, as well as Big 8 down 3.06%, which was the primary factor of dragging down the market cap weighted indexes as well compared to their counterpart equal weighted indexes. RG8 down 2.07%, S&P down 1.12%, RSP only down 0.19%, Qs down 1.4%, QQEW down 0.91%, Dow Jones down 0.31%, midcaps down 0.61%, Russell down 1.03%, Global 60/40 equities bonds down 0.7%, and GROTECTION down 1.33%. So jumping right into the charts, and as always, starting off with the S&P 500. We had this huge sell-off on massive volume. If we go on a weekly, 4 weeks of just sellers after a failed breakout. So as they say, from failed moves comes fast moves, and we had that. And some stats say this was a top 5 fastest 10% correction in history. Afterwards, we found some support around 5,500 and started staging this couple week rally so far. And really, the rubber met the road yesterday and today at the 200-day moving average of 21 EMA. We popped above with the first close. Then we had a second close yesterday with a tight day, but today distribution started coming back into the markets. Let's check out the New York Stock Exchange. We actually avoided distribution in S&P, but I believe in the NASDAQ, which we'll look at later, we saw distribution. So wedge dropped below the 21 EMA and 200 once again. Now we're narrowing the distance between the 50-day. So we have the one leg down, forming a bear wedge or bear flag here. Let's see if we resolve to the downside for a continuation of the bear flag, or we see another failed breakdown and resolve to the upside. Anything is possible. RSP, same thing, being moved down. And now we're bear flagging right at the 221 EMA. And here we go, the Qs, distribution day. Similar action, failed breakout, huge move down, and now we are bear flagging right at the 200-day and 21 EMA. Of course, we're still in the range, so this could test the bottom of the range, then we can rally above, and then maybe ultimately crack below for another leg. Or if there's a failed breakdown, we can resume higher. But it is critical to not anticipate and wait for the confirmations and the signals. QQEW, similar action, wedging into the 221 EMA. Let's see if this resolves to the downside or if it holds steady. Dow Jones, similar thing, bear wedge right now. This was actually showing some relative strength above the 221, but ran into the 150 and gotten rejected so far. Midcaps, similar action, bear wedge, bear flag pattern. Russell, similar thing, bear flag, bear wedge pattern. And this is at a critical stage in the markets right now. If another fall through to the downside, that would trigger bear flag, bear wedge break. Volatility pretty much saw a Christmas tree like pattern with how fast the VIX brought from 30 to sub 20. And with this only fledgling rally, this does pose a potential situation where volatility picks up, the VIX picks up. We see the VIX spike and the markets and indexes head for another wave down. The dollar, on the other hand, now has broke the short-term downtrend, and now we're on the short-term uptrend right now, but coming into the declining 21 EMA and declining 200-day moving average. Gold continues to be extremely strong, just flagging near all-time highs. Gold miners also hold in there. They're starting to flag after this cup with handle breakout. Silver, similar thing, a bit weaker, but we broke out this cup with handle, retested it, undercut the 30 level, but reclaimed that quickly, and now we are going sideways and tight as well. Bitcoin, let's go to trading view for that. We held the 40-week moving average, undercut, reclaimed that, then reclaimed the 30-week moving average. But right now, we are running up right into this undercut, reclaim, a level of 89,000, which is January 13th lows. And this is a critical level for Bitcoin. And also, the declining 50-day moving average is declining into that level as well. So that remains a key spot for Bitcoin. And finally, bonds. Rates continue to rise. 2 years back over 4%, 10 years back over 4.3%. And this is not looking good for President Trump's goal of bringing rates down or hoping that rates come down naturally due to inflow of buyers of bonds, or the markets realizing that the government spending cuts will take an effect, which potentially could lead to economic slowdown and bidders in bonds. They really need to do that with the $7 to $10 trillion of short dated treasuries maturing this year, or else it'll really crush the fiscal situation in the US, where we'll pretty much have 1.25 trillion in interest expense, which is nearly 40% more than our defense budget and almost as much as the outlays of Social Security. So not a good fiscal situation to get in, but highly recommend the Besset and the Lutnick All In podcast. They talk about their economic plan and the relationships between tariffs, inflation, growth, labor market, and what they're aiming to do. That being said, this will wrap up the inter-asset correlation part of this video. And let's continue on to the tail of the tape. We're operating under the bear case, sustained break below 21 EMA and back below 200-day. News Friday, we have PC inflation data. Coming into today, the keys we were watching were S&P versus the 200-day, 50 and 21. We closed below all of those. The Qs versus 200-day and 21, we closed below both. Leaders, for action, and distribution days. We saw distribution day today with sellers. Day count up 2 to down 1, still above the 8 EMA in the S&P, but back below the 21 EMA. Expectations are negative. Below the 21 EMA and 200-day and other key moving averages forces us to be negative for our expectations. Action, we gapped down a tiny bit, rallied into new highs for the day, and then we had a trend down day after intraday failed breakout. Volatility still stays elevated with about 1.89% ATR on the S&P 500. Sectors, strong sectors today, bond yields, which means bond prices fell, dollar, staples, utilities, real estate, and China. It appears that China and the US are inversely correlated now. When we have inflows into the US, we have outflows from China international stocks. Now when we have outflows from the US, we have inflows into China. So that's definitely a relationship to keep on watch. Names that were down and dragging the markets. Mag 7, which I will quickly run through since they are some of the most consequential names to the indexes right now and the markets, especially NVIDIA. SOX, semis continue to lead the markets down. Really, we haven't seen a bull market in the 21st century without semis leading. So this is not a good sign. ARK down, copper down, and XBI down. Today, we bought some SOX S earlier in the morning as a hedge/short of the sector. We added some bros, which ended up reversing. And we sold ARK, TGTX at break even, RBRK, DOX, and trimmed SSO. Back below 21 EMA and 200-day prompts us to take action. Bottom line, risk off as distribution returns to the markets. And this should be Thursday's keys. But yeah, for Thursday's keys, S&P, we're watching first the 200-day and 21 EMA. The Qs we're watching versus 20-day and 200-day and 21 EMA. And then we're looking to see if there are more distribution days that come back into the markets. So now I wanted to go over first, starting off with MAGS, which is the MAG 7 ETF. We broke the short-term bear flag to the upside. So that's a failed bear flag setup. But now we're starting to form this wider potential bear flag here, like this. We close above the 200-day. Now we're back below with a huge distribution day. RS line continues in the downtrend and rejects the 21 EMA. FNGS, which is pretty much MAG 7 plus some other names like, I believe, Snowflake or Netflare or Cloudflare and CrowdStrike, is bear flagging right here, right at the 200-day. And this looks like a potential great short below like 51.5. And I love the large volume down and low volume rally up. That is complete opposite of what you want to see in a stage 2 uptrend. Let's quickly go over the MAG 7 stocks, starting off with NVIDIA. We rallied, undercut reclaim, it's 113 level, rallied to 21 EMA, poked its head above, and we found resistance at the about 122 area, and now we're back below the 21 EMA on distribution. We closed right above 113, and this level remains key. This is a stock that you could potentially look to short, which is why we took semi-short, and NVIDIA looks really weak here. Maybe if you have a tight day, you can start a short, and then below 113 and definitely below 105, NVIDIA will likely see lower prices. And this 90 area is a target. It's like 75 areas, a secondary target as well. So going after that, let's go over the other two top market cap companies. Microsoft in a total stage 4 downtrend. As you can see, 10 weeks below 20, below 30, below the 40, and those are all declining. So not good action for Microsoft here. You also had some failed breakouts, resistance at 450. Then we had this earnings and gap down, and the rest is history right now. Apple is actually potential short here. Bear wedge into 21 EMA, break below today's lows, and you could potentially try a short there. On the weekly chart, stage 4 downtrend is close to triggering. Still need a little bit more confirmation as the moving average is aligned to the bear side. Google, wedge drop as well. You can draw some sort of bear wedge off the 21 EMA. Tesla rejected 200-day moving average. Meta, the strongest of the MAG 7, rejected the 21 EMA, but this still looks quite flimsy here, especially as price is oscillating in between the weekly moving averages, holding the 40 for now, but they're all flattening, and this is where you can potentially see a stock roll over into stage 4. Then we have Amazon, rejected the 150-day and sitting right at the 200-day, and then Netflix. We have this bear wedge here. We have this huge drop, rally above, and let's see if we crack down below. Some other mega caps, Abgo, cracked this bear flag and down below the 200-day moving average. So Abgo is officially in a stage 4 decline as well. To be in a full-blown one, we do need that moving average alignment. However, TSM, another big semis name, call in a mega cap, rejected around the 200-day and 21 EMA area out of that bear wedge. And that is looking quite weak here, the entire semiconductors ETF and index. So quickly reviewing the 21 over 21 list. Well, there's only 2 names up. One was Yamsi, and not surprising, that's a China name. We saw inflows in the China today. And this is looking still like a great cup with handle base with volatility contraction characteristics. Perhaps this gets going, but this is a retail restaurant stock. KWEB is the Chinese tech ETF, and we're just kind of consolidating at the 21 EMA here. BABA, I would say, is the leader in China. Still watching this, but living below the 21 EMA right now. It just needs to go sideways after 80% move up. And BABA does present potential fat pitch coming up in the future when it does decide to go. XLE was another sector, or the only other name in the 21 over 21 list that was green. We have identified some strength in the sector. In Turbo, we own EXE, and this has an all-time high breakout. This is the biggest natural gas producer in the United States. On the downside, RBRK, we sold this, of course. I think had a downgrade and huge gap down, got rid of it below the 50-day. Hood also torched, found support, found resistance at the 50-day, flattening 50-day moving average. Something I really want to note is that all good trends happen above when there's moving average alignment. 21 EMA above the 50-day, above the 150-day, above the 200-day, as you can see in the past. Doc, same thing. Broke below the 50-day and 21 EMA, got rid of that. Spot, wedge drop below 600, below the 21 EMA. And yeah, a lot of times with the first wave down, and once you get that rally, you can run into stocks that are showing relative strength, but they're actually previous leaders that are just in the talking process, showing their last bits of relative strength before they ultimately roll over. Lemonade so far just has been a chop fest between this 40 and 30 range. You really need a clear 40 for this to go anywhere. TGTX, just a pullback, mean reversion to the trend, but we close it for break even because of how weak the market is. RK, another name we closed. We treated this as a gap up buy above the 200-day and 21 EMA, and it's faded so far with the distribution day. Palantir, another one of those names, pulling back to the rising 50 and 21 EMA. That really needs to hold here. WGS, a genetic diagnostics testing company, another failed breakout above 100. Seems like it continues to just need more time. DoorDash rejected 200 so far, but finding support at a rising 21 and 50-day moving average. And I won't go over the rest of the names. There's only a few left, but they're inconsequential right now. So with that being said, that is it for this video. As always, if you're interested in becoming a client or anything we do, you can reach out to ted@revereasset.com or Dan and Don at revereasset.com. You can go to my Twitter and DM me there as well at Ted H. Zhang. You can also phone us at 855-REAL-WEALTH. That is 855-732-5932. Our website's revereasset.com and our YouTube is also Revere Asset. That being said, I'm going to wrap up today's video. And it is March 26th. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your week.